How do you know if you're in a financial crisis when things seemingly have changed? You're running out of resources. You're at a point where you're spending more money than you're bringing in. I think that immediately should tell you that you're in a financial crisis. Part of the problem that we have with discerning when you're in a financial crisis is that everybody tends to think that things will turn around in a reasonably short period of time. The problem with that is that they will run themselves completely into the rocks because they will just literally run out of resources trying to do that. And that really is part of the problem. It's hard to dissuade a person from wanting to try to make things work out. However, the challenge is that as they're burning the resources, invariably they completely run out of money at a point where now they really do need help. It's going to cost them money, and they don't have any money left for the help that they might need. So that's a huge problem that people have. The other issue is that many people will say, look, if I don't have enough money to pay my bills, how am I going to pay somebody for help? This is another challenge that you've got. And so what folks will do is they will literally just spend themselves right out of resources because they just want to do the right thing. They just want to pay their bills on time. They don't know how to do anything else, and they completely run out of money. And now they desperately do need help at a point where they've now got wage garnishments taking 25% of their income, and they can't squeeze the money together to hire an attorney or somebody that they desperately need at this point to help because they spent the money paying the bills and invariably just simply delayed the inevitable. So that's a thing that people typically do. Stability to financial crisis, home values and real estate losses, job loss, bank calls a note due, meaning, of course, they simply say, even if you've not missed a payment, they want you to perform on that loan. For a lot of people, they can't imagine that. The idea that I haven't missed a payment yet, and the bank says, we want our money, all of it. Well, that's happening more and more today, and especially in commercial financing, where we're finding that major loans that are in the tens of millions of dollars, whose real estate that secured that loan no longer is worth what the loans are, and the bank says perform on a $30 million loan, and of course the consumer simply can't write the check. So that's happening quite frequently. Credit limits get lowered or disappear. You're using credit to pay credit with. That has been your backup plan for all of these years. You've now run out of money, and now consequently you have no credit left with which to support yourself. Wow. So imagine if you spent your life using credit, always knowing that in the ebb and flow of life, you've had credit as a backup plan, and now for the first time, all of your credit cards have scaled back your available credit lines to exactly what you owe, and you are now going to have to live on the income that you make to the dollar without $1 of available credit. An arm adjusts upward. When a mortgage that is an adjustable rate mortgage goes up, many people don't understand how profoundly different the payment can be literally overnight. Imagine if an interest rate goes up by 1, 2, 3% on a loan that is $200,000 or $300,000. Each point of interest that a mortgage adjusts will represent 1% of the principal balance divided by 12. That means that if you've got a $300,000 loan, when it adjusts by 1 point, the interest will go up by $3,000 per year. If your loan goes from a 3% loan to a 5% loan, that's 2 points, and that means you take the $3,000 times 2 because there's 2 points, $6,000, divide that number by 12, and that person's payment just went up $500 per month. And if it adjusts again in 6 months, it's going to go up $500 more per month, and within 1 year, their mortgage payment is now $1,000 more per month than it previously was. That's enough to put just about anybody into a financial crisis. Divorce, obviously, you've got people who will get divorced. Often the issue is that they don't recognize that maybe they have a relationship that is problematic. However, they will now have twice the cost of living in many cases. They've just went from 1 house payment to 2 house payments, utilities times 2, and many other things. The cost can go up dramatically. Unexpected medical expenses, children get sick, other illnesses, all of these things can cause a person to go into a financial crisis, and now all of a sudden they're dealing with something they have no idea how to handle. Having a strategy to get through the crisis to minimize the damage and recover as quickly on the other side is crucial. However, most people don't do that. Choosing an option is only doable if you understand what you have as options and where you are financially. So if you don't really look at where you are in terms of your income against the expenses that you have, How in the world can you make those proper decisions? Having said that, most people don't have a comprehensive budget that addresses all of these things. And so as a result, they will make statements like they're willing to do anything to keep the home, not realizing that that will probably mean that their kids won't be able to have birthday parties, they're not going to be a two-car family anymore, and they're never going to take one trip to McDonald's again. Well, that certainly isn't what they were thinking. They were thinking they could just simply tighten their belt and everything would work out. When you show them what they're really spending and they recognize that no longer do they have credit to fall back on, they come to the conclusion that they're not going to be able to get back on their feet very quickly, and they're going to have to give up things that they perceive to be the things that make life worthwhile to keep the things that they want to keep.